Hello, my friends. Today we are talking about PolyTrade, a cryptocurrency project that is tackling one of the biggest centuries-old finance challenges in a decentralized finance environment. And I'll tell you everything you need to know about PolyTrade as a platform in the Polygon ecosystem. And that being said, if you like crypto, you should subscribe to the channel and hit the bell notification button because I make crypto educational content every week that you're not gonna want to miss. Now, the last thing here I promise before we get started is right off the bat, I want to be transparent with you that PolyTrade is the sponsor of this show, which is intended to educate you on what PolyTrade is trying to do, what problem that they're solving, and how they're going to go about doing it. This is not a call to action to buy tokens or a promise of profit, because that's not what this channel is about. It's all about education. The subject of today's video is of course PolyTrade, but more specifically a deep dive into the problem that they're tackling and the technology that they're using to do it. Before we start digging into the technology or the implementation though, it's important to have a firm grasp of the problem that's at hand before anything else. So PolyTrade is fairly unique in the cryptocurrency world because they're approaching a problem that is not often discussed in the decentralized finance domain, and that is trade finance. For those who don't know what trade finance is, it's an industry representative of the financial processes that drive international commerce and trade. And trade finance is quite literally part of the essential lifeblood of global economies because it allows businesses who buy and sell goods and services to access capital that they need to function and grow and exchange goods in general. For example, let's say a small manufacturer in South Africa is exporting goods to the US and they've been purchased by Walmart. In this case, the seller is the manufacturer in South Africa and Walmart is the buyer. The manufacturer will ship those goods to Walmart and issue an invoice payable in a credit period of 45 days, for example. During that 45 days, the South African company has shipped the goods, but they haven't collected payment from Walmart. And this right here is a specific example of a trade finance transaction that PolyTrade is looking to affect in particular. And this is called receivables financing. In effect, when a business that exports or sells goods, like our small South African manufacturing company in the example, when they sell their goods to a buyer, Walmart in our example, they issue an invoice, which ends up being listed as accounts receivable on their accounting balance sheet until it is paid by the buyer. In accounting terms, this means that the seller has unrealized revenue on an invoice and the buyer has an obligation to pay on a certain timeline. In this case, the South African manufacturing company has not received the actual payment for their sale yet, so they don't have that cash on hand until Walmart pays down the invoice. And for a small or medium-sized business, having accounts receivable stacking up like that can put strain on finances due to cash flow issues. They might not have the capital on hand to continue to pay for inventory, salary, utilities, raw materials to manufacture more orders. And while they wait for that accounts receivable to come in, they could just be strapped for cash. This is where receivables financing comes into play. And these businesses can seek financing from a financial institution referred to as a factor or factoring company who can front the seller the cash based on those accounts receivable or invoices that they have so they can access the capital that they need before the invoices are paid. The factoring company will give the seller a portion, usually around 80% of the total invoice ticket price up front, and then the remainder of the money once the buyer has paid that invoice down, less the factoring fees for their services. In effect, the factoring company is buying the invoices or accounts receivable from the seller for a fee. However, for a small or medium-sized business who needs access to these services, the process can be kind of difficult. It can be kind of challenging. There is a process of risk management that a factoring company goes through, which takes time and can, of course, prevent the seller from accessing funding if the respective buyer's creditworthiness is not up to snuff, or if the seller doesn't have adequate collateral to secure financing. In addition to that, there are often minimum invoice sizes and significant fees levied on these transactions, making it tough to manage. And as a result, these smaller businesses can struggle to gain access to funds that they need or to find favorable terms. And this is not a new problem. It's a centuries-old challenge with various centralized finance companies providing services to address it. That said, PolyTrade is looking to deliver a solution by bridging one of the oldest financial services into the world of decentralized finance. PolyTrade's guiding principle with their solution is that their platform can become a hub that aligns incentives for buyers, sellers, crypto holders, and investors like you and me to build an economy around receivables financing. In general, there are four major players that will use the PolyTrade platform. Businesses that are looking to convert invoices into capital, so sellers. Businesses who are buying goods from those sellers, or the holder of the accounts payable, so that's the buyer. Crypto holders who will help fund the factoring of these invoices for a yield or a return. And service providers who provide or contribute overarching processes like KYC, for example. So with that in mind, here's how PolyTrade is designed to function. Right up front, for context, you should know that PolyTrade and their platform Mainnet launch will occur on the Polygon network, which is an Ethereum-compatible sidechain, just to make that clear up front. And in the future, as PolyTrade scales, it will open up to other blockchains. That said, on the user-facing side of the platform, users like you and me who hold crypto and want to earn yield on that crypto using the PolyTrade platform, you'll see a very familiar mechanism in PolyTrade to those found in lending protocols like Aave or Compound, with liquidity pools at the center of the system. That is, of course, the entire point of PolyTrade. It's extrapolating the core tenets of the liquidity pool lending protocol model to trade finance by letting holders of stablecoins like USDC contribute to a liquidity pool, which is then applied to receivables financing transactions for small and medium businesses who use PolyTrade in that seller persona that we mentioned earlier. Now, I'm going to get there more in a second, but let me mention one more critical thing here on the user or investor side. Those who contribute funds to the liquidity pool construct will be rewarded in the form of interest on those stablecoins, in addition to the native trade token as rewards for contributing to the PolyTrade platform. It makes sense, right? The liquidity that investors bring solves one of the key challenges that we talked about, which is that sellers often struggle to get access to financing for their invoices. Us as investors want yield, these folks want capital, and we can provide it for those rewards. Speaking of those sellers, let's go there next, because you're probably wondering, how will enterprises navigate the world of DeFi without a ton of handholding? And that's a great question. PolyTrade is designed to abstract away the complexity of DeFi for the sellers and buyers in the ecosystem, which will make their experience much more like CeFi or centralized finance, where they can interact with the ecosystem or the system using fiat currency, both on deposit and withdrawal of funds. The PolyTrade platform itself acts as the interface between the enterprise side and the general investor side, and handles the algorithmic nuance of balancing asset valuation, borrower ratings, interest rates, and the various other variables that will make the platform tick. The seller in this environment is the enterprise that's looking for funding based on their invoices, and the PolyTrade platform lets these sellers effectively tokenize these invoices for factoring from the funds contributed to the liquidity pools that I mentioned earlier. The seller will upload the invoice and any accompanying documentation to the platform, which will be reviewed by a panel of validators who can review the invoice and make sure that it is evaluated for initial risk profiling. Then, if accepted by the panel of validators with trade finance experience, the rate for borrowing on that invoice will be set according to automated calculations using some of those variables that I just mentioned before. At this point, funds would be released from the liquidity pool to fund a percentage of the invoice that was approved by the PolyTrade platform and disperse those funds to the seller, who now assumes the role of a borrower, having taken money from the protocol in exchange for its invoice. Now, this is where the buyer comes into play, because now the buyer who bought things from that seller for that invoice must pay the invoice down on the date listed on the invoice, and the buyer will make that payment now to PolyTrade, who is the new owner of that invoice. Upon receipt of payment for the invoice from the buyer, the PolyTrade platform can consider the invoice closed, and the funds are placed back into the liquidity pool for future transactions. In addition, when the invoice is closed, both the seller/borrower and the contributors to the liquidity pool are rewarded in the native trade tokens. And the final thing I want to note is that there's also an inbuilt reputation system that I alluded to very briefly before, which helps evaluate the risk profile of an invoice when presented to the platform by a seller. Both the sellers who wish to borrow against their invoices and the buyers who hold the liabilities of those invoices are evaluated for their creditworthiness and risk in these cases. And successful transactions in the PolyTrade ecosystem aid in boosting reputation on the network, making that process easier in the future. The management of these core processes, like setting thresholds for interest rates, etc., will be part of a decentralized governance process amongst trade token holders in the future. The profit from this comes from a couple of key areas. First, when purchasing invoices from sellers, the PolyTrade platform can purchase those invoices at a slight discount. So when the buyer of the goods on that invoice ends up paying it back in full, the PolyTrade platform makes a profit on the margin. Basically, it's buy low, sell high. Furthermore, like a traditional factoring company, PolyTrade can take factoring fees and interest from the sellers who borrow money against the invoices. On both ends, the trade token native to PolyTrade acts as both a governance mechanism and a reward vehicle to incentivize liquidity providers and borrowers alike. So it makes a lot of sense. Now, from end to end, PolyTrade digitizes and automates many of the arduous manual processes involved in this receivables financing industry, including things like verifying the invoice, verifying the receipt of goods by the buyer, or simply the automated execution of a payment for a given invoice. All of this serves to further the mission, which is to give small and medium businesses who often face barriers in accessing receivables financing the ability to actually borrow the capital they need to thrive and grow. And conversely to that, to give everyday investors the chance to earn a yield by providing liquidity to fund these transactions. So platforms like this can make a genuine positive change for real people, which is something that I like to see and what drew me to this in the first place. The PolyTrade team has an established 7-year track record in the receivables financing space, having financed hundreds of millions in invoices to date. And this new platform, which enables everyday investors to enter the fray, is already live for testing as a minimum viable product to gather user feedback. Furthermore, the PolyTrade platform will land in Mainnet in January of 2022, and there are advisors like Sandeep Nelwal, the COO at Polygon, on board to assist along the way. So the project is chugging along here and building out their vision. There are a couple of areas that I feel there will be a lot of questions about, so let's do kind of a mini FAQ section here. First question, how decentralized is it if a panel of expert validators must approve an invoice before it makes its way into the protocol? So again, this totally makes sense, and I feel a lot of people will wonder this. So PolyTrade is addressing a globally sort of distributed existing market, which is already very well regulated, and there's lots of processes in place. There are guidelines, laws, and things that have to be followed, including regional norms around the world around how the movement of goods and documents and everything happens, and all the financing processes therein. PolyTrade's mission is, of course, to bring access to these markets to everyone, and to do so in a decentralized way will be an iterative process, right? So to move in that direction over time as these processes evolve. So much like other projects in the space, PolyTrade will gradually decentralize and introduce more mechanisms for the general user population to influence the platform. Second question, how does PolyTrade incentivize buyers to interact with the system to pay the invoices? So if we harken back to the example I used earlier in the video, buyers like Walmart always want to make payments and business processes easier for their suppliers to ensure that things happen smoothly and they can continue to do business. So buyers on PolyTrade will have a consolidated dashboard now where they can see all the outstanding invoices for payment, and they'll have various methods to pay, which help makes their process of payment more efficient. In some cases, buyers can even reduce their cost of purchase by referring more and more manufacturers to PolyTrade to consolidate their billing a lot further. Now, the other question that I think on the other side of things is, as the investor, if I contribute liquidity to PolyTrade, can I take my stable coins out of the pool at any time, or do I have to wait for the maturity of those invoices? So the target for PolyTrade is to have multiple types of pools with varying periods of performance to accommodate different buyers and liquidity providers. So to start, there will be different liquidity pools with different durations or period of performance, like 30 days, 45 days, 60 days, 90 days. You get the idea. So liquidity providers can choose the pool that's relevant for them, make determinations of their risk tolerance and the length of lockup for their funds, and that's your choice. Okay, last question I think here is, what are the risks associated with this? So there's a few different types of risks. There's credit risk, right? What happens if a buyer doesn't pay up or they go bankrupt? In this case, PolyTrade is going to cover this by taking credit insurance, which covers willful default and bankruptcies. Again, this is a traditional process. And this process has existed for a long time, and it's a critical part of traditional finance and trade finance. There's also smart contract risk. Smart contracts themselves could go wrong, could not function properly, and they're protected by insurance from like title insurance or Nexus Mutual, okay? Then there's platform risk, so platform hacks or exploit that result in loss of value. Those will be covered by a safety module that will be funded by trade tokens and trade stakers in return for a percent of fees that the platform will earn. So this is basically a similar model as the Aave model for this. It's like an insurance policy for the whole platform. And then lastly, what's next for PolyTrade? I lied, this is the last question. I believe this is the first place that this is going to be announced, but PolyTrade is going to be building a 100% on-chain trade financing and business solution specifically focused on the metaverse. The mechanics of trade finance and how the processes work will change drastically as we shift more towards digital worlds in the metaverse. And having efficient processes for procurement and financing in the metaverse could become an industry in and of itself. So current aspects of credit rating, shipping guidelines, credit insurance, this whole ecosystem of trade finance will evolve and change as we move to digital worlds. So PolyTrade is working to be at the forefront of this shift and to help shape financial processes within the metaverse, along with other thought leaders in the space. So I know there's a lot of information that we covered today. We covered what PolyTrade is, generally how it's going to work, how the economics of it work, what in general, where they're going from here, and some of the frequently asked questions that you might have. I want to thank you so much for taking the time to watch this video to learn about PolyTrade. If you want to learn more, please consider this a platform for you to build off of and building your knowledge of this platform and trade finance, which is a very interesting subject. And of course, if you have some time to stick around, please check out some other cryptocurrency videos, which I will link here on the screen. Regardless of that, I hope you and your family have a wonderful week ahead. And until next time, cheers.